Moving on to our next standard, that is ISA 501, and this standard talks about some selected items, and they will include these three topics. Firstly, we'll be talking about inventory, then litigation claims or the legal claims of the client, and then we'll be talking about segment information. So, when the inventory is material, it is expected that the auditor obtains sufficient appropriate evidence regarding the existence and condition of that inventory. And how will the auditor do that? The auditor will have to be physically present during those inventory counts. So, when he is physically present, what steps he is expected to perform or what is expected from the auditor in those inventory counts are all these five steps which the auditor will do. First of all, the auditor will evaluate the management instructions and procedures for recording and controlling the inventory. So, what happens is during the inventory count, there is a management team and then there are auditors. So, management teams are the ones which are actually performing those inventory counts, and our auditor acts as an inspector to check whether all those instructions are properly followed or not, and whether the instructions which are followed are actually appropriate or not. So, the first step the auditor will take is to check that instruction manual, check those steps whether they are appropriate or not. And that is exactly what our auditor is doing here. Then, the auditor is expected to observe the counts, also inspect the inventory himself, and reperform the counts. Then what happens is these inventory counts are not actually performed on 31st March or our end date of our financial year. They are performed to a date prior to our financial year, maybe say a month prior or 2 weeks prior. So during that time, of course, the level of inventories will also change. So it is expected from the auditor that he also perform analytical procedures to make sure whether the changes in the inventories are actually appropriately reflected or not. These are some specific cases for inventories only. So, as I already told you, it is not always necessary that inventory counts are performed on the date of our financial year end. They can be performed on a date prior to that. But in those circumstances, it is required from the auditor that he performs audit procedures to make sure that all these changes during these times are actually reflected in our financial statements. And if the auditor is unable to be physically present during the given date of the accounts, then it is expected from the auditor that he request for some any alternate date to make sure that he is present at those counts. And if the attendance is simply impractical from the auditor's point of view, then the auditor will have to perform alternate procedures to obtain sufficient appropriate evidence regarding inventory levels. And if it's simply impossible, then the auditor will simply have to modify his report because he is unable to obtain sufficient appropriate evidence regarding the inventory levels. The last case talks about a situation when the inventory is controlled and held by a third party and the amount is material. So, the auditor will have to obtain sufficient appropriate evidence by performing these procedures or these steps. Firstly, it is required from the auditor that he request for confirmation from the third party regarding the quantities and the conditions of the inventory held. Then the auditor will perform inspections or any other appropriate audit procedures for those conditions. Moving on to litigation claims. The auditor will have to design and perform audit procedures for both ongoing legal or litigation cases or just claims. So, first of all, the auditor will inquire with the management and where applicable, the legal team of the client or the management regarding any such cases. Then the auditor will review the minutes of the meeting and also check the correspondences between the client and their legal team. So, what are correspondences? They are actually the documents of communication between the client and their legal team regarding any matter. So, whatever correspondences or letters or emails or any other relevant document that was exchanged between their client and the legal team would be scrutinized by the auditor to make sure that all the information is appropriately disclosed in financial statements as well. Then the auditor will also review the legal expense accounts and finally will obtain written representation from management and those charged with governance that all the matters are appropriately disclosed in the financial statements according to the relevant reporting standards. Now, finally, moving on to our last topic, that is regarding segment information. What are segments? It can be understood in this way, that the client or the entity is a huge umbrella, and under this umbrella, there are separate identifiable units which can be disclosed separately yet are part of the entity only. So, whenever in question paper you are dealing with designing audit procedures regarding segment information, make sure that you have this ISA and this standard in your mind. So, the auditor is expected to design and perform audit procedures regarding segment information to obtain sufficient appropriate evidence. And they will have to perform all these following procedures. Firstly, the auditor will obtain understanding of the methods which are used by the management in determining segment information. The auditor will also evaluate, judge, and scrutinize all those methods which are likely to result in disclosures in our financial statements. And where applicable, the auditor will also have to test these methods. And then finally, the auditor is expected to perform analytical procedures and compare the current year's information to our previous year trends and make sure that all or any changes are justified.